good morning to you. I'm not sure there is much new to say on the Fed that has not been said already in the preamble to Kevin Walsh's first meeting, but let's have a go anyway. Are you expecting still a hawkish hold? That was the expectation going into this week, it seemed, from a lot of places. I don't know about the changes in the Middle East change that. What's your big expectation?
I think there's a good chance that he'll manage to surprise by being less hawkish than expected. I'm not sure I necessarily want to call it dovish, but I think that, expectations are clearly now very hawkish compared to where we were a couple of months ago, compared to where we were when Walsh was, given the role. So I think that I think he might be, he doesn't want to give aggressive forward guidance. That's a key kind of part of how he thinks about this, which means, avoiding to kind of confirm the idea that the Fed is going to be higher for longer may be seen as dovish. So I think that the risk of him managing to somehow sound dovish in the press conference or less hawkish than people are pricing is a serious risk out there. It is hard to have strong views on where the asymmetric risk reward is ahead of this meeting because it is his first meeting as Fed chair. So therefore, I'm very open-minded. I think it's a pretty interesting one. It's going to set the game again for Fed markets, but it's not one to go in advance with a strong position.
If he is dovish, how do assets react? Does it start with the dollar? What happens at the front end? Do stocks take off again?
So I think the first thing is that you'll see some the front end rates come a bit lower. But I think ultimately they'll transition into a bit of a steepening move. I'm not saying long end yields go higher, but I don't think long end yields come lower as well. I think they stay stickier. And I think over time, you could see them drift higher because it would be a message that the Fed is not tackling the clear inflation problem that's there. But I think that's probably a secondary move for a few days later. Short term, you see front end yields a little bit lower. You see dollar definitely a little bit softer. And it supports risk assets. And I think that the backdrop, given what we're seeing on Trump determined to sign this Iran deal, given what we're seeing from SpaceX, given the likelihood of Walsh being dovish, if anything, tonight, I think the momentum is still slightly positive for the stock market, but the risk reward is still terrible. I hate this market at the moment, given the valuation of SpaceX, given the terrible deal that looks like it's going to be signed, but you can't be bearish right now because there's not a clear catalyst just yet.
OK, and so is there more in terms of that support for the stock market, Mark? We seem to have covered the Iran story a lot this week in the run-up to this signing that is expected to take place on Friday. Now we have more details of the MOU. Does this have more to deliver? Certainly some of the detail weighed on the oil price just yesterday.
I think because people are so disappointed by the terms in the MOU that there's now a decent tail risk that there's a problem with it getting signed, or at least that's how people are perceiving it in the market, which means that if it actually gets signed on Friday, it has a bit more of a positive impulse to supply. So it's not fully priced yet. I think at the moment that, into next week, if it's signed, we'll see another small boost up for stocks. Of course, if it fails, that's a bit of a disaster for risk assets.